In this video, I'm going to walk you through credit spreads trading in 2023 for beginners. So if you've never traded it before, or maybe you're a little lost and need some help, this is the perfect video for you. We're going to be covering three main concepts. That is the basics of how credit spreads work, the strategies that actually work for credit spreads in this market right now, and then three is your weekly game plan and your mental aspect of trading. So let's dive into number one, the basics. All right, we have two different types of credit spread trades that we can put on. And a lot of people try to confuse you by talking about all the intricacies of credit spreads, but all I want you to think about when you hear credit spreads is think betting on a certain level. So if you hear credit spreads, think, all right, I'm betting on a certain level. Okay, so for instance, if you're trading a put credit spread, you are betting that the stock will stay above a certain level. So if the stock is trading here, you are betting the stock will stay above this level. If it does, you make money. If it doesn't, you lose money. That's how simple the bet is. Now with call credit spreads, it's the same thing, but in reverse. Let's say you're betting the stock will stay below a certain level. So this is the level. As long as the stock stays below it, you make money. If the stock goes above it, then you lose money. All a credit spread is a bet about a certain level. Either it's going to stay above or below. If it's a put credit spread, you're betting it's going to stay above. If it's a call credit spread, you're betting it's going to stay below. That's how simple credit spreads are. If you want the specifics of setting them up, I have multiple different videos on YouTube about how to specifically set up these trades with your specific broker. So I recommend you go watch those. But essentially what you're doing, let's say it's a put one, you're going to sell the level that you're betting on. So you're going to sell this put contract, and then you're going to buy the put right below it to define your risk. But again, if you want to learn more about these specifics there, you can go to those videos to put on the trades. But essentially you're selling one to collect a credit, then you're buying and paying some of that credit back, but the net is still a credit because you'll receive more credit here than you pay here, and thus you have a credit spread. So this allows you to define your risk, which means you have a known risk amount. You also have a known profit amount, and you should know ideally what your win rate is for this level, which we'll be talking about on the strategy section. Number two is you need a strategy. So for instance, you can go down to the link in the description below to check it out, or go to app.theimpeccable app.10%creditspreads.com and actually do dash trading handbook to get access to this little document here, but it walks you through the exact strategies you want to do. My favorite is the turtle strategy. This is an uptrending market strategy. So whenever the market is trending up, making higher highs and higher lows, you just simply follow this game plan. The game plan is this. Determine your short strike price by taking the stock close price times 97%. So go under the current price by 3%. So again, number one, 97% of close price, 97% of close when uptrending, when going up, when uptrending. Number two, that's how we're going to set up the level that we're betting on. Number two is our expiration date. What is our expiration date? Right there it says the current date plus 12. That's how simple it is. We're going to go out roughly that far and round to the next Friday. That is going to be our expiration date. And these are the only numbers you need to set up a trade. You need to know the level you're betting on. Then you go one below that, for instance, a put credit spread to define your risk. Then number two, you go the expiration date. Once you do that, you can put on this trade to set it and forget it model, and then again, you can manage losers how you want using this little guide here. It's sizing rules, exit rules, and all that down here at the bottom, but I've also made YouTube videos on that. Next, the mental. What is your strategy for credit spreads? Well, quite simply, if you want to consistently make money with credit spreads, your goal is to put on at least 2 trades a week. So that's the whole goal. Put on 2 trades every single week. And again, you do that by using the strategies here in this guide. But again, two trades a week is quite simple. Again, if you can put on 2 trades every single week, you're going to make roughly 5 to 10% a month return on your overall account. That's insane. That's what most people strive for in a single year. You can do in a single month. I know because I do this, my members do this, and so many other people who aren't even members send me end results just using this trading handbook that they're able to generate great returns. So again, the mental aspect of it is your whole job is to show up each week, put on 2 trades regardless of what the market is doing. Don't think about the future. Don't think about all this stuff. Follow these systems, and these systems will guide you to profitability. All right, guys, if you want to learn more and want to get my help with your credit spread trading, click down below. I have access to my program that's open right now. It's only open 4 days a month, and then I close it for the rest of the month to spend all my time and energy helping my members make money. Well, it's open right now, and I don't want you to miss out, especially if you've been waiting on a chance to get help with credit spreads. Anyways, if you're still on the journey to learn credit spreads and you want help for free, smash the subscribe button because I come out with a video every single day to help you become a better credit spreads trader. All right, guys, I'll see you in the next video.